Friends, this particular short session is to introduce ourselves to accounting software and the way it works. So, what we do is using a small 2-period illustration titled Rohan Software, a small SME enterprise based in Bangalore. We try to see how these 8 to 10 transactions for these 2 periods, which are given to you in the sheet and which will shortly be displayed, we'll go about doing it together. So that is how we start the session. Is that okay?
Yes, sir. Yes.
Okay. Now that the accounting illustration has been displayed to you with these 8 transactions that are based and a few adjustments which are mentioned in the end. So let us just start with the accounting equation. Hardeep, if you could help me with the accounting equation which was illustrated earlier.
So about the accounting equation method, sir, it is about the things what we own, and which is equal to things what we owe to the outsiders and self, which is only financial in nature, which we can also say is that assets is equal to liability plus owner's equity.
Yeah, perfect, Hardeep. So let me just kind of explain to what you've just mentioned. We are saying that things that we own, assets, are equal to liabilities plus owner's equity. Hence, what you own is owing to outsiders and owing to self. In a large organization, this owing to self is also known as total shareholders funds. And you also mentioned that all things which are financial in nature will only be captured. Hence, items such as a PhD that you would be having or the amount of work experience and such stuff will not be captured. Now that this particular accounting equation has been written, Andrews, could you help me in terms of stating the accounting equation effect of the first transaction, which is on March 1st, Rohan invests 5 million rupees in cash in Rohan Software Limited.
Asset goes up by the way of cash, simultaneously owner equity goes up by the way of capital.
Perfect, Andrews. What you are saying is assets going up by way of cash and capital, so we capture them. Now we move to the next transaction, wherein on March 2nd, RSN took a loan of rupees 2 million from Venugopal. So, Shalini, could you help me in taking this, in illustrating it using the accounting equation method?
So, in this, asset goes up by way of cash inflow, and liability also goes up by way of loan taken.
Yeah, very nice. So, what Shalini has said is cash going up, and on the liability side, loans going up due to Venugopal's money coming in. Hence, 50 plus 20, now this side becomes 70, loan becomes 20 and capital becomes 50. I am talking of all the figures in, let's say, number of lakh rupees that are there. So now that the second transaction has been done, we move to the third transaction, wherein RSL purchase using cash, fixed assets, computer and furniture costing 5.8 million. So Praveer, if you could help me in taking this a little further.
Yes, sir. Assets, the computer furniture purchase, so it will goes up, and another cash which outflow it goes down.
Very nice. So one asset item going up and another asset item going down. So given all of this, now I am sure most of you understand that the accounting equation of things that we own, owe and owe to outsiders automatically adjusts itself. Let me just explain to you the process in which accounting is tabulated when the number of transactions go beyond are in thousands. That is, an accounting equation method, the way we've written there, may not help solve our problems of creating a balance sheet and profit and loss statement. So, what we said earlier, assets is equal to liabilities plus owner's equity, gets modified, if you remember, as assets is equal to liabilities plus contributed capital plus the retained earnings of the past plus revenue minus expenses minus dividends. This, if it is rewritten, will be assets plus expenses plus dividends will be equal to liabilities plus capital contributed plus the retained earnings and the revenues. Retained earnings in the past and the revenues. Now if you see, things on this side are known as left hand side, things on this side are known as right hand side items, and often what we do is we accumulate items. For example, a cash increase, thus we have a cash T account, which you might have seen whenever there is an increase. Being a left hand side assets, that is cash being an item which an organization owns, will increase cash balance. And let's say the capital which was contributed by Rohan in this particular item will increase the capital account which is on the right hand side here, and that will be increased here. So one is a debit side item and another is a credit side item. What we can do is just take up the first transaction which is there, wherein we've got cash increase happening simultaneously with a capital increase. So we will be debiting the cash account here, cash T account here, and then crediting the capital T account here. It being an increase here, and we can write it as a debit being an increase in cash here. In the second item, we would be debiting the cash account here, and then we will be in the loan T account which is there, we will be crediting the loan T account here. In the third item, wherein one cash item is going up and one asset item is going up and another asset item is going down, so the cash account will be credited. In other words, the cash balance is decreasing. And then the fixed asset item which is essentially coming up is going up, computers and furniture which is there. So if we observe, cash which is increasing, getting debited twice and getting credited once, effectively gets balanced. That is, the amount of total net balance would be 50 plus 20 minus the 58 which was spent on purchasing the computers. This way of continuous processing can be done much better using software. So let me introduce you to our friends from the accounts department, and one of my close friends, Kamlesh, will take the process a little further. So I request Kamlesh to please come and take it a little further.
So let me ask one question. How does this software aid in bookkeeping, or maybe we can say accounting?
Okay, I think that's a very nice question. So see, it has got all the advantages which in the last 2 to 3 decades you may have seen computerized systems giving advantage over and above the manual systems that we would have come across.
Yes.
So let's say computerized reservation systems and others. So some of the advantages, if you guys could help me in answering, if the class could help, Purvi could just answer one, and then Amit could answer one, and just go ahead, tell me the advantages of using a computer-aided accounting.
So like you can easy retrieval of the past data.
Easy retrieval of the past data is one. Next is accuracy is one. Yes. Can you correct?
Or timeliness.
Timeliness, yes. Quality of the report. Minimization of errors.
Accuracy.
Accuracy, yes, very nice, Amit. Accuracy, that's a very nice point. And then completeness,
Choice
reliability.
of mode and format.
Yeah, choice of mode and format of presentation is also a very nice point which has been taken. So these are the items which are there. So now what we do is, I think we give the floor to Kamlesh. Hope this solves your query, Santosh. We give the floor to him and then we take it a little further.
Kamlesh sir, what is this Tally software?
It's a very nice question, but I'll let you know that it's not Tally, it's called Tally. Tally is a accounting software. It's a kind of a ERP package in one sense, which help us to record the transactions of our accounting transactions in a computerized manner. So that is Tally, not Tally.
And what is the difference between ERP?
See, the difference between ERP and a Tally is little different. Tally is a standalone which is there only for the accounting part. Whereas ERP and enterprise resource planning, it takes the other departments also. It involves HR, purchases and all those. Whereas Tally is only for the accounting. As we've just seen how the usage of getting the transactions in a compressed environment. So Tally is one of the software. Apart from Tally, there are various other softwares available in the market, like Tata Steel, they use SAP, whereas some other organizations they use Microsoft Navision and all those. Here, for the purpose of our basically our accounting transaction, which is we are taking for the small size enterprises, here we will introduce you only with the Tally one, which is just to make you aware how the computerized accounting takes place with the help of the Tally.
So I have a doubt. In case of accounts which is maintained manually, alteration, manipulation and duplication of data was not possible. But in this case, Tally, it can be done, I guess.
Yeah, that was a very good question. I'll just help you out in the one sense. Those manipulations and all those which you say that in the manual was not possible. But here that possibility is nil. In the sense an ERP package restricts those things with respect to the access to the software, with respect to the password and all those. Each users have their own password, user ID, based on which they go and enter the transactions. So the duplication, manipulations, all those are not possible in the software.
So, while we are using Tally, why not other software to explain this transaction?
As we just discussed that for us, right now the transaction which we are taking, it is only for the small size enterprise. Hence, here we want to explain the accounting entries with the help of the Tally software. The other software which are available in the market, those are being used by a lot of the large scale companies. So here, just for the ease, and Tally being a simple software wherein your basic accounting knowledge is only required, not any other expert knowledge is required. Hence we are taking Tally here for our transactions. Now let me help you out how the transactions which we have discussed in an accounting equation mode, that how it will impact in the accounting software. We'll take you to the transactions. Let us have that. Let us now start the entries in the Tally. If you see Tally, this is the main page of the Tally software, wherein we need to first create the company. Let us first create the company. The name of the company is Rohan Software Limited. In this software you can create n numbers of companies. So we are creating here Rohan Software Limited with all the other details which are required. Here for the ease purpose we are not using accounts with inventory, which is also possible in the software. We go by accounts only. We'll create the financial year, that is our financial year here is 1st March 2015. Here I am taking help of Mr. Prabir to create this company. The books begins from 1st of March 2015. After all necessary details of the company, we can create the company in the software.
So this is the starting point of the period one?
Yes. If you see the home page of the software, here we can see the name of the company, Rohan Software Limited. The gateway of the Tally, it says about the various details like
accounts information. This to pass the vouchers, we have accounting vouchers. Then various kind of reports like balance sheet, profit and loss, ratio analysis. On the right hand side, if you see, there is select company. That means a software can have various companies we can account for. Then F2, which gives the details of the date, and F2, that is for the period. Those are various features available in the software. Now we have created the company Rohan Software Limited. I'll just brief you about the features of the Tally. The gateway of Tally says various things, accounts information, then accounting vouchers are also there, various kind of reports that are available. Accounts information. Here we have various groups, ledgers that defines. A software has predefined groups which has been already there in the software, which considers about the statements which are required like balance sheet, P&L. We can create various groups according to the requirement. Apart from the groups, we have ledgers. Each ledgers are grouped into the groups which are then goes to the main part of the statements like balance sheet and P&L. We'll create the necessary ledgers with respect to our transactions as and when we record our transactions. We'll create the ledger as Rohan Capital. It has been grouped under the capital account. We don't have any opening balance. We'll go ahead with that and accept the ledger. Now the ledger has been created. We'll pass the voucher. To pass the voucher, we'll come to the main gateway and we'll first check the date. The transactions takes place on 1st of March. Since we are receiving the cash, if you see, there are various modes of vouchers. Here we have to receive the voucher. On the right hand side, if you see, now we'll pass the voucher. If you see on the right hand side, there are various tabs which defines the vouchers details, the category of the vouchers, contra, payment, receipts, sales, purchases. Here, since it is there a journal and the first entry is Rohan invests rupees 5 million in cash in Rohan Software Limited. Since it is a receipt, so we'll pass the entry with the help of the receipt voucher. Here the prefix says to. For us, cash is coming in the mode of the capital by Rohan. So the credit would be Rohan Capital, as we have already created the capital ledger for it. Rohan Capital is being credited with rupees 5 million. By being the debit part of the entry, since the cash is coming in, cash ledger we need not create it because it is a pre-diff ledger in the software itself. We'll pass the narration. Being capital of rupees 5 million invested by Rohan. We'll accept the voucher. Now we'll go to the next transaction. Next transaction takes place on March 2. So first we'll change the date. 2nd of March 2015. RSL took a loan of rupees 2 million from Venugopal. Before passing the entry, we'll have to create the ledger. Here the cash ledger has already been there in the software. We have to create the ledger for loan from Venugopal. This we need to define under the group loans liability. Since it is a liability which we have to pay, we group it under loans liability. This are required to be defined initially because it helps us for the report generations. We'll accept the ledger creation. Now we see the credit part of the entry is to loan from Venugopal, rupees 2 million. We are receiving this loan by mode of cash. So cash is debited and we'll pass the necessary narration. Next, the next transaction takes place on March 3rd. We'll change the date. RSL purchased using cash computers and furniture costing rupees 5.8 million. Since it is a payment, so we'll pass this entry with the help of the payment voucher. Here buy indicates the debit part of the transaction. We are purchasing computers and furnitures, so we have to create a ledger in the name of computers and furnitures. That can be grouped under fixed assets, the already defined group. We'll now accept the ledger creation. Computer and furnitures being debited with rupees 5.8 million. And the credit part is cash which is going out. It's being credited with rupees 5.8 million. We'll pass the necessary narration. The next entry will go to the fourth transaction. March 4th, we'll change the date first. RSL purchased stationery worth rupees 6 lakh on credit from Messrs. Hardeep. Since it is a credit purchase and no outflow, so we need to change our voucher type from payment to journal. We'll change the voucher type. Here the debit part of the entry would be printing stationery stock. So first we need to create the ledger. Let's first create the ledger. Printing stationery stock. Which can be categorized under current assets. We'll accept the ledger creation. It is being debited with rupees 6 lakh. Since it is a credit purchase from Messrs. Hardeep, now we have to create the ledger in the name of Messrs. Hardeep. And it would be grouped under sundry creditors now accept the ledger creation. So the journal entries is debit printing stationery stock by rupees 6 lakh and credit Mrs. Hardeep rupees 6 lakh. We'll pass the narration.
Sir, in transaction 4, as I've observed your other transactions, why are we debiting the supplies? Can't we just treat it as under printing and stationery account?
Good. That was a good observation, Shalini. I'll just explain it that printing and stationery is an expense. We generally expense it out, but looking into the size of the firm that we are taking care, we are treating this printing stationery as a supplies, as a consumable items, and we will be creating an inventory for that.
I hope your question has been taken care. We'll now go to our next transaction. The next transaction takes place on March 19. We'll first change the date. RSL completes its maiden sale of software to a retail store and receives a price of rupees 1.2 million. Here, since we receive the payment, so we'll pass the entry with the help of the receipt voucher. We receive cash, so the debit would be cash, and it is a sale, so it would be sale. We'll create the ledger for the sale, software sale. It would be grouped under sales account, so that it would be directly going to the profit and loss account. We need to define this at the time of creation so that the reports can be generated accordingly. The two parts is the credit part of the journal entry, software sales, amount being 1.2 million, and the same is being debited by cash. Since we receive the cash amount of 1.2 million, we'll pass the necessary journal narrations. We'll go to the next transaction, which takes place on March 21st. So RSL pays rupees 2 lakh to its creditors for supplies. If you remember, we have our vendor Mrs. Hardeep. We have to pay to Mrs. Hardeep rupees 2 lakh. So we'll debit Mrs. Hardeep with rupees 2 lakh. And the credit part of the journal entry would be cash, since we are paying the same by cash. We'll pass the necessary narration. The next transaction takes place on March 29th. RSL pays salaries to its employees amounting to rupees 4 lakh and as office rent rupees 1 lakh. Since it is a payment cash outflow, so we'll pass the entry with the help of payment voucher. Before passing the entry, we have to first create the ledger salaries. Since it is a expense, it's a direct expense, or we can group it under the indirect expense also. We'll accept the ledger creation. Salary amounting to rupees 4 lakh. There is another expense, so we'll debit by putting the prefix by, and we'll create the ledger office rent. Office rent being an indirect expenses, we'll group it under the indirect expenses, we'll accept the ledger creation. The amount of office rent is rupees 1 lakh. This both expenditure has taken place with cash payment, so create cash, and the total amount is rupees 5 lakh, so outflow of 5 lakh rupees. We'll pass the narration. The next transaction takes place on March 30th. RSL delivers a software package for a shoe gum shop, Bata India. The customer agrees to pay the price of rupees 8 lakh after 2 months. Since it is a credit sale, we'll pass our entry through journal voucher. Here we need to create the ledger in the name of Bata India, our debtor. We'll group it under Sunday debtors. Let us now accept the ledger creation. We have to receive this money from Bata India, amount rupees 8 lakh after 2 months. It is a sale for us, so we'll create software sales. Already we have created the ledger for it. So software sales 8 lakh. We'll pass the narration being the credit sale to Bata India for rupees 8 lakh.
So, after this 8 transaction, I have some doubts. This accounting package also shows in real-time basis?
Yeah, you are very much correct. All the transactions which we enter in that accounting software, on a real-time basis, you can generate the reports. After every transactions, each kind of reports can be generated. So the impact comes on a real-time basis. I'll just show you through the software wherein all these transactions, how those transactions has got impacted in the reports of like balance sheet or financial position, in the profit and loss account, the net results of the period, and also in the cash flow statements and all those.
Next transaction takes place on 31st of March. We'll change the date. RSL gives rupees 3 lakh to owners as a reward for its good performance. Since it is a payment, we'll pass through the payment voucher. Since it is a dividend, we need to create a ledger. Dividend. It's an indirect expense. We'll group it under indirect expense. Now, the dividend of rupees 3 lakh. So it is being debited with rupees 3 lakh, and the payment is through cash. So we'll create cash. We'll pass the narration. At the year end, there are few adjustments. To pass the adjustment, we need to take the help of the journal voucher. We'll pass through the journal voucher. At closing stock rupees 5 lakh. We have procured printing stationery stock of rupees 6 lakh. At the year end, the closing stock is 5 lakh. So the expense is of rupees 1 lakh. We'll pass the entry, debit the expense. Our expense would be printing stationery. We'll create the ledger since it has not been then. It's an indirect expense. We'll group it under indirect expense. Debit printing stationery with rupees 1 lakh and credit printing stationery stock with rupees 1 lakh. We'll pass the necessary narration. Being the printing stationery consumed during the period, we'll accept the voucher. Next adjustment entry is of depreciation rupees 2 lakh. We have to create the ledger depreciation and it would be grouped under indirect expenses. We'll accept the ledger creation. Depreciation amounting to rupees 2 lakh, and because of the depreciation our assets values goes down, so we'll create it with our asset computer and furniture 2 lakh, being the depreciation for the period accounted for. So the next adjustment entry is interest charge rupees 2% per month. We'll first, the entry for this would be interest expense to interest payable. Let us first create the ledger interest on loan. It's an indirect expense. We'll group it under the indirect expense. We'll accept the ledger creation. Our debit expense interest on loan rupees 40,000, 2% on 2 million. So 40,000. Credit, since the interest which we have to pay, so we'll create the ledger interest payable. We'll group it under payables or current liabilities. Here, if you want, the group can also be created, but we can use our predefined group current liabilities. We'll accept the voucher. Yes, all the reports are updated on a transaction basis, so the statement and the financial position changes after every transactions. Is there any other questions?
Thank you, sir. Sir, do these accounting softwares have got any inbuilt tool in order to analyze the performance?
Yeah, those kind of analytical tools can be available there in the software. Each and every transactions which takes place, we can go through those analysis through the ratio analysis mode. We can check their liquidity, their profitability, and all those with the help of the ratio analysis, like current ratios, quick ratios. I'll just show you through the software.
I'll take help of Mr. Prabir. Prabir, let me show this ratio analysis. Santosh, here is the ratio analysis wherein we can see the solvency and the profitability and liquidity of a company with the help of the ratio. On the right hand side, is the current ratio, quick ratio, debt equity ratio. These are various analytical tools which are available in the software.
Sir, I would like to know that will I able to see the cash flow for the said period?
Yes, the cash inflows and outflows can be checked with the help of the graph also in the software. I think you are more concerned about the Satyam case. Just after the Satyam case, this cash flow statement was a white line light.
Yes, sir.
Yes, that can be possible, and just will show it to you with the help of Probate.
Let us show them the cash flow statement. Here we can see the cash inflows and outflows with the help of the graph.
So in case of non-profit organization, can we make income and statement account instead of P&L account?
Yes, definitely that can also be possible in the Tally. So we can have that also for the non-profit organizations.
Sir, now as we have seen the summarized report for the period 1, sir, can you please tell us how the closing balance of period 1 will appear as opening balance of period 2?
Let us start with the period 2. Before that, I would like to show the closing balances of the last period, that is March 2015, with the help of the trial balance. Here, if you see, this is the closing balances. Now, let us see this closing balance, whether those has been carried forward to the next period as opening balances. We'll change the period. We'll again see the balances with the help of the trial balance. So in this second period, April 15, if you see, the opening balances is there, which is being carried forward from the last period, and there are no transactions which has taken place in the period 2 as of now. So the closing balance remains the same. So here we can see how the balances are being carried forward to the next period. Let us now start the transactions for the period 2. The first transactions, credit sale to Bata India, rupees 10 lakh. Since it is a credit sale, we'll pass the entry with the help of the journal. It's a credit sale by Bata. Since we have to receive the money, it is a debtor, Bata India, rupees 10 lakh. Credit software sales, we have already created the ledger. Enter the necessary narration. Next, cash sales, rupees 5 lakh by cash. Before that, we have to pass the entry with the receipt voucher. So 2 software sales, rupees 5 lakh. Debit cash which is being received, so cash rupees 5 lakh. Narration, cash sales. The third entry, salaries, rent are same as last month and paid. So it is the payment. So we'll pass through the payment voucher. Salary, rupees 4 lakh. and the second expense is office rent, debited with rupees 1 lakh. We are paying by cash, amount rupees 5 lakh. The narration. Next, the adjustment entries. Closing stock rupees 4 lakh. We'll pass the entry accordingly as we have passed the entry in the first period. Printing stationery expenses, debit rupees 1 lakh. Credit printing stationery stock rupees 1 lakh. We'll pass the narration. If you remember, the stock was rupees 5 lakh for the printing stationery. Now the closing stock is of 4 lakh. So the expense is of rupees 1 lakh. Next, depreciation rupees 2 lakh. Computer and furniture. Pass the narration. Again, interest charge 2% per month. Accordingly, we'll pass the entry. Interest expense, debit. Interest on loan rupees 40,000. Credit interest payable rupees 40,000, being the interest payable on loan. Next, interest paid rupees 80,000. So here we have interest payable. We have to pay the interest now. So interest payable is being debited with rupees 80,000. Since it is a payment, so we'll pass the entry with the help of the payment voucher. We'll change the voucher. Interest payable, debit 80,000. Interest paid by cash rupees 80,000. Next, the narration. Next, loan repaid rupees 2 lakh. So payment voucher. We will debit loan from Venugopal rupees 2 lakh. Will credit, since cash payment, so credit cash rupees 2 lakh. Narration, loan repaid. So now the entries for the period 2 has taken place. I'll just show you the statement, balance sheet, and then profit and loss account. See the position of the balance sheet as on date. For the period 2, capital loan from Venugopal paid to the tune of 2 lakh. Sundry creditors are there. Profit and loss account for the current period. Then fixed asset, sundry debtors, cash in hand, and our printing stationery stock rupees 4 lakh. So here we conclude our session with respect to the accounting entries in a software. I would request Professor Ramkumar Kakani to take the next part of the session.
So with this we end the session of this short session. I thank each one of you for being part of this co-creative system. Thank you.